Thank you for joining me today on the Sonny Chung Podcast show. It's a privilege for me to have Nick DiLeone on our show today. Nick is a real estate investor, a syndicator who went from working for Navi real estate companies, which manage over $150 billion in assets. Now he runs his own syndicating multifamily business. Nick have raised over millions of dollars, build strong relationship with his investor, and close deals across the country. Today, it's a pleasure to have Nick on the show, and he's going to share his journeys, how he find the deals, and what it takes to work with an investor. Nick, it's a pleasure to have you on the Sonny Chung Show. And last thing, I would like you to share, if I miss anything, can you share about yourself, who you are, and what your mission in your syndication business is?
Yeah, Sonny, I appreciate you having me on your show. It's always good seeing you, coming to our meetups. So yeah, you pretty much cover it, but like personally, I live in Frisco, Texas, originally from New York, lived in California for a little bit, got sick of California, moved to Texas, started our business. I'm married, 12 years, twin boys, and I live with my mother-in-law who is Korean. And if she nags me, I really don't understand the nagging. So that's always a good thing.
You know what is something when I talk to you, I always learn something about person that I talk to, and for you to actually living with your mother-in-law is really rare in the society nowadays. So congrats, kudos to you on that part. You know, especially with Korean, is you have that kind of Asian, not Asian, but Eastern mentality that families stick together. That's great to have in your way of life.
It's a blessing because she is the sweetest lady. She's probably spends 2 or 3 hours a day praying, 2 or 3 hours a day either golfing or walking. She brings so much positive energy to the family, and she loves seeing her grandchildren every single day. She sees me in the morning when she's working out, and I say good morning, and she kind of like grunts at me. She sees the boys, and she just lights up, and she just thinks they're the best thing in the world, right? So it's great. It's great for the family, great for the boys. It's a huge blessing.
Yeah, I could not agree more. We tend to, as a person, we want to surround with someone we love and we care. You know, so let's dive in about your real estate journey, Nick. What was your first exposure into real estate industry, and when did you realize real estate was your calling?
Yeah, no, that's a great question. So and a lot of people in syndication start out in information technology and kind of other businesses. So that's kind of where I started out. My undergrad was business and finance in IT, worked for a consulting company. I worked for a dot bomb company on Silicon Alley in New York City. So kind of New York City's version of Silicon Valley for a couple of years. And we were in the conference room. We had foosball tables and free sodas and all that stuff, just like any startup. And the CEO of the company kind of had a rah-rah session. Everyone's going to become a millionaire. We're going to go public, all this stuff. And they burned through a lot of money, some big VCs money. We went up to 140 people, and I was one of the last 2 people that we got bought out by a marketing company, Interpublic Group. And that's when I realized I need to work for a stable financial services company. So applied for a job. It was at the time, it was TIA Craft became Nuveen. And I was building mortgage and real estate systems for that company, and interacting with the business people there, doing deals, buying class A office, industrial, retail, multifamily. I'm like, wow, this is a cool asset class. Like they didn't really teach us real estate in undergrad. They focused on securities, publicly traded securities. I was like, this is my asset class. So that's when I went back to school, NYU, got my master's in real estate investment at NYU, and that allowed me to pivot to the business side within Nuveen, TI Craft. And I was there for 15 years. I was there for a long time, mostly focused on real estate, even building computer systems, or property management. I managed the budget process across the country for all asset classes. And then eventually becoming, head of analytics, analyst team, and then an asset manager. So it's a great asset class because you get to interact with so many people. It's a people business. And you get to touch the asset, and every single asset is different. It's not like a security on the bond and stock side. Every asset is different, and you really, as an entrepreneur, can layer on your creativity and see things differently than every other person sees. How you can add value, how can kind of wring the value out of the property. So it's just a great asset class.
Well, thank you for sharing that. So pretty much, do you think because of you work for institutional companies, is that make it easier for you to make a transition to a real estate syndication to open your business? And in that time, what have you learned doing when you make that transition?
It's a good question, Sonny. So first, there were a few things. One, yes, it definitely gave me credibility when I kind of pitched my deals to friends and family. When I was in California, before I even had a deal, my friends and family committed a bunch of money to future deals just because they knew, like, and trust me. They knew that I've been doing it for a while. So that was good. But I also needed to kind of calm my arrogance a little bit and humble myself a little bit and realize that I don't know everything, because my focus was on asset management, property management, operations, right? That was my focus. Didn't know the debt side, didn't know the acquisition side. So I joined a mastermind, and through that mastermind, learned how to underwrite better, but also partner with people that kind of mirrored my skill sets, right?
Hmm.
But I really came to realize when you're doing it on your own, it's a lot harder than when you at least it feels like when you have that W-2, it feels very safe. It feels like the company is going to take care of you, right? And I worked at that company in Nuveen for 15 years. It was part of my identity. And I got laid off, and it was a huge punch in the gut.
Yeah.
And I worked for a value and industrial shop, which is much smaller. And that's where I kind of discovered a little bit more entrepreneurism, because it was a smaller shop. Learned about GP and LP equity splits, got laid off from that job. That was another punch in the gut. And then I moved down to Texas to get W-2 jobs in real estate, and COVID hit a month later. That was a third punch in the gut. And I was like, you know what? We just got to do my own thing. And doing your own thing is just so much harder because you have to do everything. It's all on you. You can't, in these big companies, the people will blame each other, and there's politics and kind of all this stuff. All that stuff doesn't matter. You need to execute to put food on the table and make money and get deals done. And you just have to make it happen, right? So that was the biggest learning lesson. It's just, you're kind of like in a bubble when you're at the W-2 and you have a lot of support. There's no support. You just got to figure it out. And then you build a network to kind of build your team and partnerships, because you can't do it on your own.
Wow. I guess over a lot of adversity that makes you become a person who you are today and able to build a company, Leone Real Estate Investment Group. I guess in the journey of life, we have to have those kind of punch in the gut, so we know where we stand and how we can grow as a person, personally, and also in your business. Um, when you start your business, I did some research on it, right, and learn a little bit more about you. There's an incident. You actually lost a partners during your career. How did you navigate such a difficult time? Why keep your business running? And what happened in that incident? You don't mind sharing a little bit about that?
Yeah. So I don't have all the details. The family has told me that there was an accident. My partner, very young, passed away. And it was difficult because he was boots on the ground for our property in Waco.
Mhm.
He lived in Waco, very close to the property. and we kind of had to figure out what we were going to do. We decided to sell our Waco property before he passed. He had he was major ownership of the partnership, and it was me and him pretty much doing most of the work, right? So I relied on him a ton, and he was my yin and yang. I'm
Right.
kind of the gas, and he's the brakes. He was the brakes. He was a lender. He had a really good institutional background, Citibank, Starwood. So that was challenging. And to my point before, you find partners that kind of balance each other out. Now I lost a partner that would focus on the underwriting. I would focus on the operations, asset management, and the fundraising. So I needed to really build up my skill set. And one way I did that was it was his idea to help to create an internship program. So we have, Mike Prowl Memorial Internship Program that we've been doing for about 3 years. And all those interns have gone on to get really, really good jobs through the internship program because they get hands-on underwriting. Like most internships are, hey, go gather this data, play with the spreadsheet. They're like underwriting deals. So through that internship program, I was thrown into teaching them how to underwrite properties, multifamily properties. And that's really sharpened the saw in regards to my underwriting skills. Because when you're teaching somebody, that's when you really are forced to really understand things. So we've been doing it for 3 years now. Really good underwriter. Missed my partner. He was a really, really good partner, really good person. But yeah, I just had to make the pivot.
Well, I'm sorry for your loss, Nick, but also it's come something out of it. Your partners that help you shape your underwriting skill because he did have some influence on your way of doing business. During that time, let me go back on your first deal, your first real estate. Drop your memory down a little bit, right? On your first deal, beside your friend and your family, but you got to raise capital for it. What was the biggest challenge, if you can recall, when you raising capital for your first project from the outside investor, not friend and family?
Yeah, so most of the capital came from friends and family. And I will say for that deal, that Waco deal,
Mm-hmm.
any bozo could raise capital at that point in the market. It was easy. The capital raise was so easy.
Mm-hmm.
Didn't have to really try that hard. So I'm gonna pivot a little bit to kind of my current situation, and I'm raising capital for 2 deals right now.
Okay.
And this capital raising environment is the opposite. It's very hard to raise capital, especially for apartment deals, because a lot of people have been burned by apartment deals. Our deals are all performing well, paying distributions, not doing capital calls. But a lot of people I know a guy that comes to the meetup. I know you know him. He's invested in 10 deals, and all 10 deals are not paying distributions. It's like
Yeah.
dead equity.
Mm-hmm.
So what's happening is when I talk to people about this apartment deal, it's in DFW. It's very similar to a Waco deal. It's in DFW. It's cash flow positive day one, fixed rate debt, loan assumption. Historically, has performed very, very well. Hot, mid to low occupancy, 90% occupancy. But people are scared of anything related to apartments. There's a lot of uncertainty in the market. They're just like, I don't want to commit to an apartment deal because I got burned.
Yep.
We're also raising capital for a warehouse deal. We're oversubscribed for that deal. And it's not because it's a good deal. They're both really good deals. It's because it's not apartments. It's like this new shiny object for people. So I've been working my ass off the past 4 months to raise capital for these deals.
Mm-hmm.
Starting in Thanksgiving, missing my boys' sporting events. They're 8-year-old twins, holidays, late nights, weekends to do this capital raise. And it's really been humbling for me because I was like, I can do this. It's no problem. It was so easy last time. It's so hard this time. And I think we're going to do it. It looks like we're going to do it. We got a big capital commitment yesterday on this deal, over $1 million. So very excited about it. But it's been very humbling. And to your point, what you talked about before, when you get humbled and you go through these painful experiences and you reflect back on things, that's when you grow. And this has been so painful, but it's been so good because I know I'm going through growth. I'm growing closer with my kids, growing closer with my wife, realizing what's really important because I'm paying lip service to it before. So this painful experience has been awesome. And it looks like we're going to get over the finish line, which is even better. But yeah, the painful experiences when they're the growth opportunities.
So when you actually raising capital for your apartment, right? It's all about credibility as well. And because the investor got burned so many times for the past year, a lot of syndicators, they lose money due capital call and so forth. When I have a conversation with you, you haven't done the capital call and you did protect the investor. So there's your credibility moving forward, but you still sometimes struggle raise capital. Is that the way you structured the deals that make the investor feel okay, it's too good to be true, or they just have this kind of scarcity mindset because they got burned before? What
Yeah,
was your thinking when you talk to an LP and try to pitch your deal?
yeah, it's definitely scarcity mindset. Like all my existing deals and the investors in the Waco deal, if they're able to, they're rolling the capital into this other deal because our track record's good, right?
Mhm.
The way we structured this deal in particular, we made it very LP friendly. We don't have a hurdle rate. We have an 80-20 split, which is kind of institutional. This is what we did at other institutions I worked at. Very favorable, kind of institutional quality level LP terms. Texas Teachers Partners Group, those were some of our LPs that we have in our deals. And very low fees. So we make it very LP friendly, and giving more returns to our LPs because we know it's a difficult fundraising environment. But to my point, just specifically, like we've ran ads, we've seen ads for both deals. We get a lot more clicks on the warehouse versus apartments because they're not drilling down. They just see apartments. They get this kind of, feeling, right, of anxiousness. Like I've been burned in apartments. I don't want to touch this. I don't even want to know about it because
Yeah.
I'm like holding capital back to fund a capital call for like a future deal, like a deal that I'm in. So credibility within our own group, very strong people that know, like, and trust us. Building up with credibility with other people, you just get grouped into the syndication space, even though our track record is strong, pay distributions. And I think people that have passed over this deal, especially what's going on in the government right now, it's very deflationary with this Doge thing that's happening. I think interest rates are going to decline. And these two deals that we're buying, everyone's going to regret not investing in these deals because we're like at the bottom of the market at this point.
Right. On that theory, based on your knowledge and what you see in the market, that you think is a great project for investors to actually invest in with your companies. Doing that, can you just walk us through it? Let's say someone have a deal, right? And when the syndicated deal went right or wrong, they don't know how to talk to an LP. And I don't know if this happened to you before or not, but if something pop out unexpected, how would you handle that with the LP? Like unexpected capital call, which you haven't done a capital call, but you hit your number pretty well on your investment. Can you walk through the process? How do you prevent a capital call and how that's happened in your current deal or your previous deal?
Yeah, so I am a passive investor in a few deals, and I have one deal that made a capital call. So one thing I appreciated by the sponsor who made the capital call was constant communication, right? So having those difficult conversations. I forget who said it, might have been Alex Hormozy. might have been Gary Vee, big fans of both of those guys. The more you have these difficult conversations in life, the more successful you're going to be. So I understand why some syndicators don't want to tell their limited partners they're doing a capital call. It hurts. A lot of these people are like their friends and family. It might be their uncle, their aunt, their grandmother, right? Like it's hard to have that conversation. But what happens is you stop paying distributions and you do a capital call and there's no communication. People are always going to assume the worst. They assume the worst. Maybe he's stealing money from me. Maybe I don't trust my nephew anymore. Like, and he's taking my money. Like, what's happening? So you just got to over communicate what the plan is. Come up with a plan. Make sure you talk with your partners. Well, like what a good plan is. Talk with your lenders. Try to work through the debt. This is what a lot of people are doing. They're restructuring the debt on the back end. And then once you have that plan, over communicate what that plan is. People will appreciate that. The guy that's doing the capital call and the deal, I'm partnering with him on this next deal, right? Because I built a relationship with him. He's over communicated. He feels so terrible about it. And he even, which, I think GP would offer this. He's like, if I lose your money, I'm going to do everything in my power to try to make you whole on the next deal. Just doing the right thing, just the right thing to do, because he truly feels horrible that this is happening, right? So yeah, that's what I would suggest. Just over communicate and involve your LPs in the decision. And that's what this guy's doing. It's like they don't maybe have voting rights per the, operating agreement, but involve them, overeducate them, have webinars to kind of talk about it and flush out, because there's a lot of feelings, like get through all those feelings and like make sure everyone feels heard so their emotions calm down, and then you can, come up with a good solution.
Right. You say something that resonated with me when you say about feeling. Toward the end of the day, it is business, but also emotional, human emotional in the project, because they trust you, they like you, and you transparent. That's why they invest with you, right? If not, then why should they invest with you on it? Correct. So I know. Let me shift about your personal development, Nick. When you deal with everybody, right? When you deal with the LP, your general partnership, everything on your plate. How do you manage your to day operation, and you manage your level of stress to prevent you from burnout? Because I talk to a lot of syndicator, right? And syndication, when they have to do capital call, they got burnout and no tomorrow. They got stress, they sweat. Yes, my LP, they care for the LP, right? Limit partnership because it's their money. And that's depend on your moral compass, right? You either are good or bad. But when someone do the right business like you do, you're gonna have stress. You're gonna have all this thing in your head run 1,000 miles. How do you manage that level and compose the way you are, that build the confidence for the investor? Hey, I know what's going on. I know I'm a human. I know what I need to do and what I need to do to provide a better service for my investor. What's your process day to day to calm your mind, or meditation? Can you share a little bit about that or expand it?
Yeah, that's a great question. So one of the great things, I have two big resources. One is The Miracle Morning by Hal Elrod, great book. So he interviewed all these successful CEOs and all the things that they do throughout the day to be successful. And there's, I think, 5 or 6, I think it's 6 things. Savers, right? So I forget what it stands for, but it's basically silence, which is meditation, reading, working out, gratitude. And I'm missing out on a few of these things, but I do these things every single morning. I try to. I haven't been as good. Definitely do the gratitudes every single morning. Definitely work out every single morning. This is my office here in Frisco. There's a CrossFit gym in the office. There's a shower here. So I do that every single morning. I started doing, I started these workout challenges, with a bunch of real estate guys that I know. This past month, we did a cold plunge challenge. So we jump in the pool. There's a video on Instagram of me in the pool doing a cold plunge challenge with the snow on the ground, and my son creates a little snowball and he throws it at my head while I'm in the pool. So I go through that whole process to kind of like eliminate stress, get all that stuff done. And the cold plunge challenge, the biggest thing is it's a mindset thing. Is I hate the cold. I'm originally from New York, got really soft in California. It gets cold here sometimes in Texas, but not that cold. And I'm looking at that pool and I'm like, I despise that I have to go into that pool. When I come into that pool, I'm like, when it's 23 degrees out and the water temperature is 37 degrees, I'm like, I could do anything after doing that cold plunge.
Mm-hmm.
So there's a big mindset thing that's really helped with this capital raise too, because it looks like we're going to hit it now. Like, I can do anything after doing that. So that's one piece. The miracle morning is super, super important. The other thing is I join communities of like-minded people and we talk about things. So this thing right here, I just got back from a conference called Go Abundance in Utah. And there's a lot of successful people there, people like quote unquote successful because they've made money.
Mm-hmm.
But most of the conversations are about how to be a better husband, how to be a better father. We do breath work, talk about our issues, our trauma, our kids, our wives. So I meet with these groups nationally. Some guys are in real estate, some are in this. Zoom calls, 4 different groups. So I have access to maybe 12, 15 really successful entrepreneurs. Some are business owners, whatever, to talk about stuff and get those emotions out. And like, what do you think about this problem? How do you solve this? Right. So they're my kind of like C-suite of people that I can talk to and consult with because they potentially have dealt with it before because they're real estate people, business owners, etc. So that's a big thing, especially as a guy. You don't necessarily talk about stuff, have community. Women have those things because it's socially acceptable. Those calls, most of those calls are about shit happening in family life, not necessarily business, but you also have that outlet as well. So those 2 things, like surround yourself with like-minded people, or, you come to the meetup, that's another way to kind of connect with people. I have these Zoom calls with these guys, and then the miracle morning.
I thank you for sharing that. It's not all about business. It's just, sometimes you need an outlet to find like-minded people to help you grow as a person, so you can do the business right. You've been to a lot of different meetup, a different networks, and what from all your studying and connecting with people and learn about them and to help you grow, what is the best piece of life advice have you ever received, and how it have shaped you by attending all this network?
Yeah, I think it's the journey, syndication journey. Well, it started before podcasts and before I started doing it. I sold a property in Plano, my last W-2, and we were doing buyer interviews for the warehouse deal. And one had a fund because I came from the fund world. Money would just kind of come down from the heavens. The other team that we awarded to was syndicating the deal. And I was like, what is this syndication thing? I had no idea. And then I kind of got introduced through podcasts. So I don't know if it was necessarily advice. But it was like listening to the podcasts and understanding that it sounds cliche. People say it all the time, but like real estate is a team sport especially when you're doing it on your own. Can't do it on your own. You need to partner with people. I humbled myself and realized like I can't do it on my own. I need other partners to kind of scale this business. So in those podcasts, Jake and Gino, Michael Blanc, Rod Khalif, all these different education groups, is like, okay, this is really expensive, but it feels like this is the right path to go go down because all these like-minded people. A lot of the people still do have W-2 jobs and they want to get out of those W-2 jobs, become in syndication. So joining one of those masterminds is super, super important. Go to as many meetups, local meetups as you can, because a lot of those people are in those groups. We have a big syndication group. They have billions of AUM. They've been guests at our meetup. I think they said 50, some crazy percent, really high percentage of their partners, they met at our meetup. So going to these meetups and these events is super, super important to kind of like tap into the pulse of, what's happening in the business area, but also like just everyone that's just moving in the same direction.
What you've been saying, just summarizing it, that it's all about training, networking, also learning, right? It's like coaching. Can understand you have a mentor or someone that can help you grow. Not you can do it by yourself. It is a team sport, but it's very important to find someone actually like mine and have the right partners. So when you identify your partners, let's say for your project, what's the three things that you're looking for in a partnership when you try to move forward with a project?
Yeah. So in GoBundance, we have, they ask us what our superpower is.
Mm,
So my superpower is relentlessness. I do not give up, and I keep going and going and going. And I was thinking about, honestly, I was thinking about dropping this deal and disappointing a lot of people, this multifamily deal, because it was hard. And my son said to me, 8-year-old son, he's like, Daddy, you can't do that. DiLeones don't give up.
that motivates
You're
you.
right. You're right. So like he was the spark. Like I'm preaching to him, but I'm not really living it. He was the spark to have me push. So number one, you have to be relentless. You have to not give up. You have to push. You have to be gritty. Right? That's number one. Number two is growth mindset. Right? So we talked about this, like when you fall down, I fell down through this capital raise. It was challenging. It was difficult. I was ready to give up. Seeing what benefits that come from it. It's humbled me. I've become closer with my wife, with my kids. It was one of the biggest life lessons ever, and it's grown into like a great thing. So that's the second thing. And the third thing is kind of related to relentlessness. You got to work your ass off. You got to work hard because you don't succeed by like wanting it. You have to do. You have to push. You just have to hustle. And coming from New York, everyone hustles. Everyone's got sharp elbows. And I've softened up a little bit living in California and Dallas. But that's one of my superpowers. Like I'll outwork anybody when I need to. And that's super important. If I have someone that's on my team that's not working hard or lazy, not a fan.
Would you think because you work from New York and California, is that those environments shape how you do business today?
Yeah. So I have a story when I came from New York and I was an asset manager and I was excited to be out in California. I'm calling my leasing broker. So I manage, Class A office, industrial, retail, multifamily. So it was like an industrial broker. He was leasing one of our properties, big 20,000 square foot lease. And I called him 6:00-ish and he wasn't answering the phone. I was getting all ticked off because the New York way is just going to keep working. And I'm like,
okay.
Oh, wait a second. I moved out to California to turn the volume down and not be so intense. He's probably like with his family or something.
Yeah.
You don't have to work till 11 o'clock to feel validated, 11 o'clock at night. And I was like, okay, let me not call this guy. Let me like work within the hours that everyone else is kind of working in California and just be more balanced. So that was a really good kind of learning experience in balancing things out. And then living in Dallas, people are way more friendlier.
Yeah.
And I think, some of it might not be real. Some of it's just kind of normal, cultural. But there is a part of people here that are more down to earth, more easy to connect with, that actually want to connect with you. And this is why we'll never move from here. It's great for families. It's just it's better than New York in a lot of ways. I miss New York sometimes. Don't really miss California too much. But we love it here. So yeah, it's definitely shaped. We've been blessed to kind of be on both coasts and settle here in such the great state of Texas. Dallas, we love it out of all the cities. Yeah.
Well, I the way I see that is I haven't been out to California and New York. I mean, I do some business there with me with a developer and everything else. But the thing is that different environment you're gonna encounter with different kind of personality. Like New York's more like go go go, California more laid back. It does kind of shift how you do business based on what you know today, right? What's one good advice would you give to your younger self if you started out from what you know? Let's say you talk to your son. What would that advice would be? Like,
Yeah. I mean, I tell all the young people that come to our meetup, like, you're very ambitious, very smart, and lucky in some ways that you're here and you've had the kind of chutzpah, the courage to come out to this meetup. Because the earlier that you start in real estate, the better, right? So I would encourage my earlier self to, I don't know if I would have done it because I was a W-2 employee for so long. It felt safe, but start doing real estate, investing in real estate, even if on the side, as early as possible. Go to the meetups earlier. I mean, I'm trying to teach my boys. I'm having like a mini internship or apprenticeship for my boys, doing social media and things like that. I'm trying to teach them the business if they want to do it.
right.
But just try to learn as much as possible. Go to meetups, join groups, network with people. See if it's interesting to you, because if you start, I mean, we have one guy, his name is Kylan, I think. He came to our meetup and now he's part of a syndication team, a big syndication team in DFW. I think he was still in high school, and it was so cool to kind of see him like a few years later, like as part of the team, as part of the investor relations. Yeah, just start as early as possible, because they always, they say the best time to plant a tree was 20 years ago. Next time is today. Like, start today, right? And even if you're not young, it's not too late to start older and do it on the side and try it out. See if it's interesting to you, because there's some crazy statistics, like 80 to 90% of millionaires made their millions through real estate, right? So
I I I really appreciate you saying that. It's when you say get out of your comfort zone, go to meetup, is have to deal with your limited belief, right? Because if you have a limited belief, you cannot grow. And then for your to share the story, it doesn't matter what age group you are. If you have something interest in the real estate industry, find a network or find a meetup and to learn about it, connect with people. You never know. One right connection can change your whole entire career. Right. So it did happen to me. I've been in real estate for way too long, but I never take that action, go invest, and that's something I would tell my younger self, invest early, like you say. So because of it, I'm able to find a good team, do something that I would not imagine able to do in the development space, because I like development. It's just something like building a community, leave something, not a legacy, but is help shape a place that where people can grow and do business. And that's what I like. I think in our real estate journey, and everybody in real estate, we want to help others by sheltering, right? Give them something to live, or establish a career for them, or give your investor money back, right? Like help each other to grow in this real estate business. And most people don't do that way. I can argue against like some people very greedy on it, and then they say, okay, give, and then they just take, then they give back. So that's they got a scale of balance, right? And if you've been in the business too long and a long time, you would understand or find that balance within the real estate and your personal growth, and that's how you attract the right people. Don't you agree?
Yeah, I mean, this is why I fell in love in real estate back when I worked at Nuveen many years ago in IT. It's a
Mhm.
people business, and it's a very small business. It's a very small world. Sorry, not small business. If you have aggressive practices or dishonest practices, it will come back to you. People talk,
Yep.
but one of the things I had a mentor at Nuveen, um, that promoted me, moved me to San Francisco, and he had this belief that when you wrong somebody, it can wrong them and previous generations.
I love
Right?
that.
There's like and this has been like a proven in science that like it can damage people's DNA.
Mm.
So what the term that I came up with that I teach my boys is it's basically karma, but when you give, the universe gives, and when you take, the universe takes. And
1000%.
and I've seen this happen so many times. My boys will get mad at someone or whatever. It's like that, that I don't want anything bad to happen to that person, but that person will, God or the universe will kind of come back and repay that person in the way they're being kind of doing things to other people. At 100%, that's just the way the world works. Just to accept it. And when you do, it gives you kind of a moral compass to do the right thing, because it's, if you're acting just even selfishly, it will come back to you when you give.
Wow. That's the way you sharing this is talk about spiritual, right? If you're not able to make peace with your inner self, it's gonna expose out. It's not about your exterior, it's about your interior. If you innerly feel comfortable and you know where you are, then you're gonna attract the people based on the energy you put out.
Right.
And Nick, thank you for sharing your golden nuggets and how you live your life and how you capture investor and how you take care of your investor in a way that the way you are, right? It's not about you have money, okay, that's great, but how that going to resonate with as a team, collectively, as a family, when you look at it, right? When you talk about uncle, family, friends, your close friend to invest in because they trust you. But if you have a uncle that actually don't care about the whole family, it's kind of hard to move that project ahead of time. So I think that we should use that kind of model when you qualify an LP, because not all LP are act alike. Some LP can give you a headache. Some LP can be the greatest LP in the planet who you will work with. So I I want to close this podcast. Thank you very much with respect to your time. I have a closing question based on what you have so far. If today was your last day on this planet, Nick, Leon, real estate, investment, you can leave your son, that's great. But however, in this particular question, what you built and what you accomplished, it's will rest with you, right? They on this planet, nobody know about Nick anymore. However, Nick can leave three truths behind for the next generation and to people who close to him, to your family, to your son. What would that three truths would be, Nick?
Yeah. So I just learned one of them recently, and my wife has been kind of telling me this, but I need to learn on my own. Be humble.
Mm,
Be humble. Because sometimes I kind of step outside that, probably because I'm insecure. Um, and boast and brag or whatever. And this humbling experience of raising this capital for this deal has like created some glue between my family that I haven't seen in many, many years.
Wow.
So it's been magical, and so that's one kind of benefit of being humble. Well, you should be humble, because that attracts people. People are attracted to that. Humble and transparent, right? The other one is we just talked about it, right? Like, so when you give, the universe gives, and when you take, the universe takes. So I become more spiritual as I get older, and kind of realize and see. You get wiser when you get older. You see that's how the world works. So just know that that's how the world works, and work within it. Just don't try to force that.
Love that.
And then the last thing is, my dad taught me this. Like, if someone says something to you that kind of like really gets under your skin, number one, a lot of times when someone accuses you of something that's negative, that's what they are. It's a mirror onto who they are. That's why they're doing it. But also, if it really irritates you, there might be something to that. There might be a trauma there for you that person touched on. Maybe it is true. Maybe there's some reality in that. So you should explore that. When you kind of feel the emotions in you, they're kind of rising up, like, ask yourself, is that true? Why is that kind of striking a nerve? It's a learning opportunity potentially, right?
I thank you for sharing that. It's all about inner soul works, right? It is a reflection of who you are, and then it's not you. It's something that actually triggered your mentality, right, or your mindset. And you gotta ask the right question: why I feel this way, or why's happened to me this way, or what is trying to teach me, right? That's how you grow and develop as a person. Well, thank you very much, Nick, for being authentic in this show and share your passion about it. I can see you grow and you humble down. I mean, in this business, we have to put on the facade. Hey, I know my shit. I know what I'm doing. But if we remove that label and that mask and be authentic, so I think you attract more people. Thank you very much for being on the show today and share your story, Nick.
Thank you for having me on, Sonny. Appreciate it.